All right, so this is gonna be it's kind of like a recap, um, kind of like a scan, a little something, just what happened this week, how I traded it, what I did good, which was very little, what I did bad, which was a good amount. Um, this is a fucking tough range to play, and a tough timing aspect to play as well. It's something that I've kind of been noticing. It's really been one of those things that I just feel like it has been a little bit difficult to get a read on. I mean, not really. It's always kind of been a short in this range. I mean, this was a short the week of the May 12th, giving us that kind of exhaustion climax following an aggressive gap up on a lot of these names that are kind of ending that reversion trade from the April lows. So that's a big red flag. We get the exhaustion in the May Apex, the Moody's gap down, and then we take out the highs of the following week. That closure filled the gap. It was an after hours sell, so it was kind of one of those things that, especially with VIX expiration being that Wednesday, you're fine seeing that fill the gap and sweep the highs on relatively low volume for the spread of this candle and the gap that's bid, and the consideration that all of that gap was retail trading. I'll pull. Let's see if I have the screen. No, but May Apex was huge though. May Apex had a major anomaly in the call put ratio, which affects the dealer's books. Is this live? Okay, which affects the dealer's books and can move the market under the hood in ways that make it a little bit more difficult and pin it. Sometimes not pin it. Depends. But this right here is. Oh wait, I wasn't even talking about. Oh yeah, the call to put ratio. This right here is um, May 19th. The Moody's gap down. A lot of people tried to buy the dip. A lot of people got smoked. And I mean, we see the subsequent structure shift. The really weak bid this day. The gap down that gets bid. Pre expiration that's not unwarranted or Yeah, it's not unwarranted. Not weird to see. Um, and then the expiration hits, right? Bond auction, we see a gap down, a lower high within the gap, don't fully fill it. And the bond auction hit, we fade 1% in less than an hour, get some continuation, right? And so, as far as how I played it, I positioned short the 15th, 16th, and 17th, or 16th, 16th, 19th, and 20th. Um, near the high days on all of them. Just the relative exhaustion and the timing in the window. And I waited to get full size. Um, so I didn't have a lot of size over the weekend. I added some in. A little bit of an, you know, early addition to my position. I kind of underestimated or overestimated, I guess you could say, the what's the correct word for it? Overestimated the potential for the Friday candle to be a top in terms of just liquidity, the expiration, and the after hours gap happening, right? That's something I kind of underestimated. Um, so my additions were a little bit early, right? Max drawdown was like 20% though. I didn't close a single session throughout this entire trade over 20% red. And after this, I think I was sitting 40% low of day Wednesday, low of day on Thursday. And I cut a good chunk of my position, right? But then I proceeded to cut the rest of my position at the internal lower high. So this is where it begins a little bit of an issue with my execution throughout this trade, right? Because we developed this relatively weak buyer off of this initial attempt at the 581 spot. Um, and, we have the wick below from the 12th itself. And just the overall weak, right? When you think about supply and demand, there's always going to be buyers and sellers. A buyer showing his hand at the weekly open at a spot where there's a lot of intent behind, and at a spot where he previously defended on a daily closure. And the bid's weak. You see continuation in the close, an aggressively weak close, $3 in the last hour of the session. The majority of it happening in the last 10 minutes. And I cut my position right here, went to the gym. You know, just like a fucking bitch. Sorry. But then we get the gap done the next day. Hit that 576 spot, which, if you know, it's a relatively important range. The January 13th low, the May 7th closure, and the election gap, November 5th closure as well. Right? So, I had a good entry. I had a good amount of confluence, and I had a couple spots to trim, right? Like this would have been a good spot. I had 17 contracts. This would have been a good spot to take 12 of those off. These two spots, 40% and 100%. And then swing the last like 5 over the weekend, break even stop, because this is a progression gap failure. But there is a good amount of volume on this print, and the importance of this range is, relatively important as far as the closure above 576. So I ended up taking on new risk over the weekend on heavy size, taking a 30% loss on the 27th, right? But this bid in itself was extensively weak. And it was one of those things where it's happened on Memorial Day. The volume is more or less a passive seller in regards to just how the action acts at the highs of that session. All the volume pouring in at the highs, no true structure within the chart, a breakdown off open, buyer into the gap, and the short week in itself, right? And this was, the highest volume of the session, not of the session, but the high day, the weaker close. And it's all kind of just a draw into this range, right? You see the gaps that are unfilled, the very liquid high from the 21st. And that's what we see, right? We see the following session on Wednesday get a little bit of aggressiveness as far as the closure. But still didn't like push into the new week opening gap, I guess you could say, right? And we do, what's interesting here is we end up getting this court ruling, news after hours on the 28th, right? Wednesday the 28th, we open up at 598, right? Open up the session at like 593, 592, whatever it was. This happens on the 29th. This happens during a short week, right? And this is an aggressive move. I mean, this is still, $2 above the recent highs that we established pre-market or after hours on the 19th. And there's just going to be a draw and a facilitation into that range, especially during a short week, especially when you have the gap that's getting defended. That's just a draw, right? You still have gaps above. You don't have such a footprinted high that we established on the 19th in itself. And in the short week, it's just, I built out a position and I ended up taking a very, very minimal win. I didn't want to position myself over the weekend because when you look at this, I feel like you have to understand the draw is going to be in this range, at least into 595, 598 is that's the range where I feel like positioning yourself short side is very lucrative, not very lucrative, but a very objective risk to reward to some extent. Understanding where the draw is within this range, similar to how it happened in the Moody's downgrade. It's an auction, right? There's going to be unfilled orders. There's going to be layered sell orders up there, and just don't undermine the relevance behind extended trading hours is all I'm saying, and how those moves happen, and the lack of liquidity that occurs during those sessions is relatively important as well. So coming into the week of the second, right? Yeah, right. It's the second. It's kind of hard not to look short, right? This is the last week of Vanacharm, or of the window of weakness. So I came into the week Sunday. My plan was trade SPY within that range, right? 595 to 598. Position yourself accordingly on July puts. target 586 to 579. The dark pool, the gap fill, um, the potential path to least resistance, right? Being developed with a very weak buyer coming off of these 29th and 30th prints. Obviously, this is also the end of the month. I forgot to tell you that. This is also the end of the. I knew I was forgetting something about this Friday closure and about this week. This is the end of the month rehedging effect that can often occur at the end of the month. Monthly expirations, monthly positioning changes, dealers unwinding, whatever it is. There's a lot of volume that comes in on these days. You can go back and you can study. Same thing with options expirations. Obviously, a little bit less relevant because it's May expiration, but still, there's things that happen on that session, during that day, that will give you an influx of volume and potentially relatively stronger close, especially with a wick if we get like a sell into the end of day, and that's just what happens, right? So coming into the second, my thought process was just the last week to short. Not the last week to short, but the last week, the window trading is just one of those confluences I feel like that has benefited me more than it hasn't. Like, yes, I can still long things post OPEX before the new month flows kick in. And yes, I can still short things during that, OPEX week. But I just feel like most of the time the aggressiveness, when I look back at the best long opportunities that I've had April 7th, April 9th, that right there was, a window with those Vantage Charm supportive flows kicking in, right? The best shorts I had January 24th, February 27th, March 24th. Yeah, pretty much it. Those have all kind of been in that window. So that's why I'm kind of thinking, the week of the second, the flows don't really kick in until the week before the options expiration, which in this case was the week of the 9th, which was this week. Let me try to short it, right? And so, that was my original plan. That's the plan I kind of wanted all along because of the relevance behind this gap. And because of the kind of ease of a trade like SPY, right? It's relatively easy. It's relatively liquid. You have your targets. You have, a liquid after hours and extended hours sessions. And then I kind of come over to nvda, right? And obviously nvda is such an important name, right? Up 1,000% since 2022 lows. Begin this distribution, in my opinion, in March of 2024, March 8th, with that parabolic short and a distribution completing itself on AMD. That split us in half in a quarter one of this year, right? So my thought process is the relevance behind 142, right? That's the deep seek gap that resulted in that 17% day on the 27th. That's the February highs that resulted in that notable exhaustion and that notable seller within that gap showing his hand pre-February 21st OPEX, which kind of topped us out of the broader market as a whole. And so that's just an important spot, right? When that kind of tops us out in general, as far as the broader market exhausting itself, stalling at new highs prior to February expiration, and then getting the subsequent continuation from that seller, from that gap, and from those highs being stalled and the flows on supporting the market in February, right? And so this is an important spot. This is what we had in June. Sorry, the initial parabolic short that really resulted in an aggressive leg and then the subsequent UT and UTAD and path of least resistance that we developed in quarter one of 2024 to 5. So this is an important spot, and this is a name that I don't think that this, 3 lower low daily accumulation has really resulted in enough of a cause to outweigh the subsequent cause that we developed over, the course of a year plus. I think this is just another lower high in a range that was not necessarily digested upon the earnings report on February 27th. These, February highs, this is a lot of imbalanced within the chart, as well as this January 24th print as well. This was a pretty quick mover, if I don't mistake it. Yeah, coming up 148. So, it's one of those things where I kind of went a little bit too aggressive on too short of an expiration. We have the kind of breakaway gappage, right? That's another red flag. When you kind of get this aggressive buying that can potentially be the beginning of the end in terms of the climax, right? All that buying getting absorbed, an aggressive seller showing his hand, and you should usually get a nice, at least some continuation off that. That's kind of my opinion of what happened here during the week of the 19th and the end of the week of the 12th in terms of the kind of preliminary signs of a seller within this name. showing itself on the 14th. As far as the broader market kind of doing in its own way, end of week as well. But we see the high sold off. We see this potential at the initial time you had on the 21st, lower high and full gap fill from the 14th, right? This is a really important name, and this is a really aggressive move. This was a really nice short. I had SPY though, just so you know, if anybody ever watches this, and it happens at an important spot. The earnings report high from the February kind of not capitulation print, fake out flush print to lower high range, fading the previous daily highs, previous weekly closure, lower high territory. I'm just this. I don't know if you can tell, but this price action was not supportive enough by a strong buyer as much as it was by the supportive flows in the market. And after such an aggressive move, there's on a name this liquid, that gap's not necessarily the majority of the time, especially during that window. That gap's going to be drawn into, and it was. Oh, it sure was. Um, but I kind of came into the week and really anticipated. I mean, this was so early. I can't lie. Looking back at it, really anticipated that we would see this preliminary signs of distribution occurring the 14th through the 23rd. And we see the kind of little run up into the earnings report, the 5% session or 5% gap up the following day off the report, and then the immediate 7.5% drawdown that we get after. So that kind of coming into mind, I thought to myself, I could build out a good position between 130 and 140, which is, the after hours move is not that different. 138 and 140 to kind of build out and position a short to 131, right? That was the initial thought. Just a change of character, maybe, closing some prints under 137, getting that kind of seller pinning us under the previous highs, and a quick move down in the last week of the before the supportive window. So that was the plan. It did not work out. I added in a little bit about quarter size or third size at 138 on Monday. This was not really an aggressive bid. It wasn't really an aggressive seller as well. Did I even get to this week? I guess not. It wasn't really an aggressive seller as well. And then, we get the gap up. I add into 140, and at this point I'm red like 20%. I have like $128 calls expiring the 20th of June, right? And I thought these could go to them in the money, honestly, trimming a good amount of my position here, and then holding some to 127s. Within this week, within this window, really only would have been 7% decline or 4% decline from the weekly closure. So I thought it could work out, and it really didn't. And I ended up getting fully exposed NVIDIA short on Tuesday, and cut for 20. No, I think 19%. Yeah, 19% on the fourth throughout here. I was down like 30%, 35% here. Went red 7 and then cut when I kind of realized like this is not the move. This is a relatively strong bid on that Tuesday session, uh, the third. So that was kind of the first domino to fall as far as my execution. It was just front running a lower high. I tried to execute during the window, failed to realize the potential for this to draw into that earnings candle high and back into that deep seat gap. And that's exactly what happened, right? Digested the earnings print, kind of failing to reclaim it. Um, this Thursday short was really nice. I really want that move to 131 though. But I'm solely kind of focused on SPY now, just because I feel like it's the best opportunity out there. But this is a good one. This is it just the seller was not present within this range. The draw is to an area where there's a larger amount of supply that's up here, and I was too early. But yeah, we get the reversal on the 5th. The tape starts acting really aggressive up here. Kind of started noticing it on the 5th. The tape has been aggressive on NVIDIA. I mean, this is the 5th. What else? SPY. Yes, this is Monday. This Monday. That's an insane hit on the tape. This is Tuesday. 145 again, smacked. Um, 135 again, or 145 against Smack, and that ended up being, the high of the week, right? We established that on Monday of this week, right? The amazing influx of volume, right? The notable buyers getting kind of absorbed to some extent. Um, and then the aggressive seller just literally seeing it in the tape. And then we kind of see the breakdown, see the relatively ugly. Oh, yeah, this Friday gap on the 6th was so stupid. Just the breakdown and lower high attempt, penny under 142. I mean, this was not a bad spot up here to position July's right here to here. Like, I think this goes to 131. It's just the window aspect that kind of gets me a little bit within June Apex. So that's why it's difficult a little bit. But you see the subsequent fade of the highs, the aggressive seller showing his hand on Monday, right? You're seeing the bid off of that Friday gap kind of get absorbed, in my opinion, right? We have the, flat open Tuesday, continuing to bid that deep sea candle high, and then the gap up off CPI where we fade 145 again, right? And I did actually position here and on SPY off of CPI. Well, I'll talk about my SPY position, but I attempted this here, was green. We bid the gap again from the Friday session, saw the kind of, no, this wasn't 145. This was 145 here. Faded the high by 1 cent, and we kind of get this like 3 higher high distribution on an hourly perspective above the earnings candle. That's pretty nice. And then kind of the lower high this session, failing this high from that Monday print, 145. So, yeah, I tried this short, right? We kind of had a decent little lower high developed here, kind of watching that 144 spot, the previous weekly high, and we see some nice leeway in the close. We see the gap up, down on Thursday. This gap up of CPI faded, digested, aggressive moves happening the entirety of this session. And then we see the 145 draw, which is just where the ask is stacked. Nice progression. And then closing at the highs is relatively bearish, in my opinion, just because of the kind of late buyers that could be getting smoked. But I ended up cutting my position for 4% loss at closure on the 12th. My position, I was up 17% here. It was one of those things, I had July's. I was kind of looking for 140 to 137, and I just kind of, this range has been relatively difficult. I've been saying that. It's been hard. And it's just like, man, like I just cut my position, took my L, and it ended up gapping down, 2%. So I did short it, but it didn't work out to the full gap fill. And it's something that I'll look at going forward, if we establish like a lower high next week, trade this to 137, and then, to 131 potentially. But I just, I don't know. It's a little tricky. Just how I've handled it has been relatively poor. But the volume that comes on this weekly print, fading the relatively important spots. Now we have the highs being sold twice, the progression lacking. The red to green closure this week on an increased volume comparison to the last is pretty important. Obviously, another session being a full week, but, nonetheless, it's important. Small spread as well. A lot of effort, little result from a buyer. But it's just the highs being faded, the good news being sold, and it's one of those things where it's just okay. I kind of fucked it up. I positioned too early, and then we had the actual opportunities, and I'm fine with not swinging that. Like I can't predict Israel bombing Iran Thursday right after after hours closure, and we gap down 1.5%. It's just I don't know. This was kind of the first big error I made for running this lower high, besides taking on the new risk over the weekend of the 27th. But it's one of those things like this week, a lot of it was because of the fact that, okay, we'll get back to this. So that was my original plan for the week of the 2nd, was to position myself again above this high, the court ruling high, and trade it to 587 to 586 to 579. So I did exactly that, right? We, the tape continued to be relatively bearish. The highs continued to get sold. This was an aggressive amount of buying on Tuesday, right? Really just drawing into that range, propped up, by the draw being into that range, and supported by no aggressive bid. And we see the stall begin on Wednesday. I started positioning on Wednesday around 579, 578. I think I got some ads. See the nice leg, the gap fill, the lower high, and the weak closure. Gap up that Thursday. I took some more ads, and I was green about 23%. At low of day on Thursday, I think I was green about 17 at the closure. Going into Friday. Wait. This is Thursday. Okay, yeah. I took some ads up here. This was the high being taken out. I took some ads up here. We see the nice leg. Low of day, I'm green like 23%. I think I closed down or closed up like 20. Okay, I started taking ads here, and then here, and here. Okay, so yeah, this is the 15 minute. Okay. And then we get the Friday gap up, right? We get the failed breakdown. It's not really anything that was relatively bearish, right? It creates a new gap for us to have to fill. It's just not really an aggressively clean price action. And we see once again a nice leg. All right, no, this is when it closes. We see a lot of volume come in near the highs. Not really. They bid the gap and they don't really get a strong close or new high day. Closes relatively flat on a small spread print with very little volume coming in. Failed to close under the previous high of the day, but very little volume coming in comparison to the previous day. It's just kind of a failed breakdown. There's a bidder after hours, and you see some follow through. But the issue with how I personally handled this was another error. This was the second big error I think that kind of developed this position being a flop. It was more or less, having the thesis of adding in within this range, even to 600, building on a position on July's down to these gaps, right? And taking nvda set me back some capital. And just theta as well, So I was green 20%, 17% in the closer on the third, on the fifth, right? The sixth I closed down 14, and I opted to swing this just because of the fact that I didn't think that this was such an aggressive bid. I probably should have just cut it, repositioned the next week into CPI or off of CPI. But hindsight's 2020. I was really green. I had time. I thought we could, turn this back around. And the Monday price action was very hideous. You saw nvda that was a disgusting look, right? The gap, not the gap up. It was a small gap up. Seller at the highs throughout that session. And very weak close, fading the previous daily high, closing such a small spread print, giving you the look that there's just no buying up here, right? And then we get this Tuesday, like small gap up and pop in the close, and it was just like, okay, well, I closed this day down. I closed Monday down 17%. Couldn't take any ads, which is fine. Closed Tuesday down 19. Opened up here down 30 off CPI. We got this slight gap up off CPI. They gave back a lot of the move. There's a pop. Gave back a good chunk of the move before open. More than half of it, right? Which is not a good thing to see, right? Especially happening during after hours and developing this structure, right? Developing this structure. The news pop on the fifth that sold us off above the court ruling highs was pretty big, and now this off CPI. But I was, down 40% at high of day, and I just cut my position. I opted to cut my position. I thought it was the move. I thought, you know what, man, I can just position again. I took 2 big losses back to back. It's kind of that mental thing, in my opinion, as well. This has been difficult. I was really green, went really red, and it's still a good trade. I just positioned myself too aggressively too early. But what can you do? It's not the end of the world, right? We obviously see. Oh, well, no. Okay. So I then, left the crib, went to the gym, which is something I gotta stop doing. I gotta just be able to fucking stay here because I could have gotten a better entry. But left the crib, went to the gym, came back around 12 and positioned myself short SPY nvda. SPY June 30th. Kind of looking for that 595 range in terms of like, okay, the middle of this, June 6th gap, and the weekly high from the 19th, right? So just that general range. And I mean, we see the lower high, we see the weak bid, we see the seller off open, um, bidder in the gap, and then we see the kind of weak pop into the high of day area. Um, Digesting a little bit more of that CPI move. Nice leg, lower high. I position myself short. I'm green about 60% here, I think, right? We open up a little bit down on Thursday. I'm green like 50%. I got a nice vol pop. These are moving nice. June 30th. Um, had a good amount of these, like 1.1 to 1.6, or 1.05 to 1.66 was a low here. And then we see the reversion. We see the digestion of this move that happened, which was pretty aggressive, pretty imbalanced. They were also blue balling the fuck out of this on Tuesday. I mean, this was a nice spike that was bid in the gap from the overnight session. Another spike, and then the fucking rally where we get more. It's all just like the news was smacking here and here and here and giving us nice legs, at new high of days with volume coming in, all into CPI. And you know, I'm sitting red like 30% at the high days here. I closed down like 20 something. It's just like, fuck, man. Fuck. Like, this looks so good, the short side, because of how it happens, how these hands are being changed, and the aggressive leg that's occurring. I mean, this range, even though we're coming into June OPEX, this range has completely wiped the demand. The only thing that can be supportive of this is these flows and maybe just that positioning propping this up and pinning volatility. But we got a nice fall spike today, right? We obviously have expiration on Wednesday. So if we kind of digest, we sit here for a little bit. Dude, this FOMC can be very similar to the December 18th move. This was expiration as well for the December sequence. And this sparked a 3% move intraday after the exhaustion of the highs. You know, this is a big thing right here. And I just handled it a little bit poorly. I'm going to be able to catch the move. It's going to happen this week, in my opinion, unless we get a gap down. I actually would like a gap down, personally. But I cut my position. I cut it in the close. We closed near the highs, at the highs, which, like I said, in hindsight, is a relatively appealing sequence in terms of I don't know how to explain it. It's just one of those things that I feel like I've seen more than once that signifies potential absorption of demand. We see the news happen after hours. 1.5% move. No real bid this session here, right? And I'd taken some nvda exposure on the lower high that we developed on Wednesday. Right around here, it was pretty green. Was targeting 140s to 137, maybe even 131. But I cut my position the next day, closing at the highs. Just one of those things. I'm just kind of like, okay. I mean, man, this has just been relatively aggravating. I went green. I cut it. I went green. I cut it, and then we obviously get the gap down. But this in itself is a very appealing look. Obviously, hindsight, this really was a lower high that we developed from the CPI highs to the Monday pre-market, or not Monday, Thursday pre-market highs. And we had no aggressive bid and the volume pouring in at the high of days, and just that close near the highs kind of threw me off, and I decided to cut it, pinning it above the Tuesday session's high and closure as well. I don't know, it was one of those things. I made the decision to cut it, and it ended up being the wrong play. I got a little bit impatient. I've been a little bit, I guess you could say, stressed about this range. It's been kind of fucking pissing me off ever since, even this sequence and this right here. I, took a big hit, and I was just like, man, it's probably better not for me to try to do this. And those ran about 100 something, 150% at low of day. In all honesty, I mean, we kind of did hit my target for this trade. I was looking for 579, but that's not feasible, and I'd kind of rather that 595 spot was smacked. We did actually, I wouldn't have minded taking some risk over the weekend, but I'm not going to reposition myself again like I did the 23rd. Hopefully it doesn't end up working out, but we see the 618 lower high on a relatively weak bid throughout Friday's session, right? So this is just simply my only watch for next week. The CPI high, breakdown, lower high, and Thursday. That's when I cut my position. We see the gap down, a subsequent lower high. We're breaking structure each time, and a relatively weak bid off the initial attempt in the June 6th gap, right? Further attempt in that. So that's all I'm kind of looking for this week, right? Like I said, I'm going to probably look to position myself, like, depending on where we open, I hope we can get a gap down to start the week, because what I'm kind of looking for is just a lower high to be developed within this range, right? Like if equilibrium can get bid, which is around 590, right? If we can pull back into that range, maybe gap down. We can establish a discounted lower high, right? We can break that hourly structure that we developed, the lower lows that we established Thursday pre-market, Friday pre-market, and I can short the lower high depending on how deep it is. Pause. If it's to 593, I'll probably short it on June 30th to 586 to 590, and then re-roll it to 579, where this potential path to least resistance could be. But if it's to like 590-ish, I can just re-short it on July. It's down to here. Catch a pretty nice move. So that's all I'm looking for, and that's kind of how I've traded this. This is all I've been trading, this and nvda. I basically broke even on nvda this week, but I had a big loss this day. But this looks hideous as well. I'm really going to stick to SPY because I feel like it's the most simplistic setup. But if there is a short, I mean, it's going to be something I have to look for. Let's see if we have any data. We have the Fed meeting on Wednesday. So that's just a big thing, like that expiration and the Fed meeting on Wednesday is probably something I'm going to look to position short in. And then really nothing. So it's probably going to be something I look to position short in. It can literally, I'm not going to lie, depending on where we open, this can lead to a relatively big move. I'm going to be completely honest. That 3% move we got on the 18th. What's the 3% move here? 579. Obviously, if we don't gap down or push lower into the week, I'll probably look to add in around this gap, though, if we can draw it into that range. I'm just not going to position myself with no leeway in a red week. On this swing over the weekend, even though, this weekly close does not look good. So yeah, I mean, that's genuinely all I'm looking for next week. I think this is going to be our UT. When you think about a redistribution, I think this is kind of going to be our preliminary supply. This is going to be our climax, our reaction. We didn't necessarily get a sign of weakness. I don't know if we need to. I think this is going to be our UT. We can get a leg into 579, and this is a pretty big spot in my opinion. And I think the timing aspect is the one that gets to me. Maybe the July flows, or maybe just July in general can kind of prop us up. And one of those things where it's like supported by just overall, Summer of George sequence that's maybe vol's very compressed. If we can get a nice pop here to like 28, maybe vol can just digest and be very compressed during that window, and we can get a short similar to just this sequence. We can get a short, see how July in general, just the rally and the kind of July OPEX, giving us that leg in August. Maybe that can happen, and maybe that can kind of be our UTAD of this range, right? Spark a pullback to equilibrium, lower high, and then you can play it to 564, right? Something like that. So that's kind of what I'm looking for here overall. I am going to look short this week, like I said, depending on where we open up is my execution is dependent on that. But it's one of those things where, I don't know, I shorted it, I had a nice win, I cut it too early, took new risk, gave back my profits, broke even this week, right? So I'm break even on the position. And then I just, take that NVIDIA trade, take a good hit on the capital, straight away from my original plan. Got my original plan where I wanted, was green and didn't have any room to add. The confluence is relatively still there, right? I would be green about 20% over the weekend. I mean, I'm completely fine with staying in those Julys and this UT above these highs. There's no structural bid. There's no structure. There's no higher highs and higher lows. There's news getting smacked with volume at the highs of this sequence. And as I'll talk about in a little bit, the broader correlation of just equity market in general and the rotations and volatility and all of this can align to an aggressive sell, and the way that this demand is absorbed, the way that even this week can be relatively bearish. I will say I'm gonna slam shorts. Like, I'm looking for more of an intra-week move here, but I'm gonna slam some fucking puts this week. I think that this can be one of those weeks where those supportive flows can be unsupportive and can be bearish. It all depends, but that dealer positioning can potentially shift to bearish. So that's what I'm looking for. 579 before July. That's 100% what I'm looking for. It's just one of those things where, I took a bad position, took a big loss, was green, had no room to add. None of this week's price action was very supportive at all or structural at all. It was all newsprints being sold off, hands changing, a campaign being established, an aggressive footprint coming in at the highs of said sequence, and a subsequent lower high, lower low, lower high. And a relatively ugly daily print with the highest volume we've seen since the last kind of notable sign of a seller, right? Since in the month, and then since May 21st, right? We look at the volume, we look at where the volume's coming in at this range. It's all coming in as aggressive continuations from a seller. whether it be from the highs or whether it be from lower highs within gaps. It's all pouring in there, right? It's a disgusting sequence, and I played a little bit incorrectly. But I've kind of been on the right directional read, I guess you could say. It's just been one of those things that takes a little bit of time. But I think now that we've kind of, the structure's kind of shifted, I think we can really get the aggressive move. And I guess the structure did kind of shift on Thursday, but I think, week by week, I can short this next week to 579. I think we can get a 3% move, and potentially not. I don't know. It depends. If we don't open down lower, I'll probably look for 590. Right? We'll have to see. But it's just one of those things. I've played a little bit incorrectly, and it sucks. But the confluence is still there, and the structure. You have a relatively good opportunity if we can get a break of structure and subsequent LPSY to trade this down to 579. CPI, news, right? A gap up that's relatively exhaustive. Court rulings, Moody's, supportive flows into expiration on the after hours gap down, the retail buys. Look at where all these highs are established at. Look, they're very important, or what they're established off of, I guess you could say. And just go ahead and look at the broader market in general, and especially, I mean, just look at this fucking chart. Take into context the continuation we get. Right, the risk to reward long side is not there up here except for a select few names, at all. Right, like at all. I like to trade the bigger picture of things. I'm not going to trade long up here just yet. There's some names that I like though soon, but I need the broader market to cooperate. And I mean, it's not the case right now. This is not the most relatively appealing closer on QQQ. Honestly, I think we can get like a breakdown. Some a lot of volatility. Depends on how the Fed meeting goes. Maybe we get like a this week breakdown pin above 595. That's a fucking insane amount of volatility. 6% average intra-week move. That's not too much. But I'll look long on a few names when the timing is right. I don't think that's going to happen. We might not see 579 this week. We might just see 590. Depends on where we open up. I'll position myself again at 600 for 590, for sure. But maybe short it again the following week when there's no supportive flows. We can get something off of June ending, potentially quarterly expiration down here on a gap down, and we get the continuation higher. We'll see. The QQQ is very much the exact same. We obviously had the inside bar that we established on Friday, the very weak, slow volume spread on Monday, and then that kind of pop on Tuesday, the CPI where those highs are sold, and like over here as well, we're even getting nice legs on Tuesdays as well. It's the most annoying part because we saw these aggressively nice legs. No, that's not even annoying. That's beautiful, right? You're seeing aggressive legs from sellers off the new highs and closing near the highs with CPI the next day. I just couldn't fucking add into my position. But then we get the CPI gap up, the exhaustive kind of climactic high off of a data set, subsequent lower high developed on Thursday, right? This is, very appealing. Very appealing. I mean, look at that seller that shows his hand, and we just get no bid at all. Didn't even close near the highs. Did, but not really. And then the gap down and lower high that we developed on Friday as well. So, we still have the full gap to fill from the 6th, and we still have those kind of weekly highs to pull back and see if we can get a, wiped buyer here. So that's kind of what I would be looking for on QQQ if I was trading it this week, is just, similar thing. Break of structure, lower high, and then potentially push to, especially if we can like sweep this a little bit, lower high, 516. If this range is wiped, we're pulling all the way to the 509 range, in my opinion. XLF is a sector that's such a major red flag when you're getting prints like this, when you're getting sequences like this. It's a big red flag, right? You have tech and you have financials. Those are the two largest sectors in the S&P 500. These are names that are a little bit less liquid, but they give you very good preliminary signs of a distribution happening across the market, right? Money rotates out of these first and kind of gives you that signal in tech as well. But this is a fucking hideous chart. Following the April 7th rally, all you have is a digestion of this previous distribution and the previous highs and fill these gaps. And you just start to see the redistribution again, right? We see the nice leg come off of the March 4th gap fill, the 2024 highs, this previous distribution at all-time highs, and the subsequent lower highs developed after that, right? Where we have the digestion, we have the kind of very weak, effortless bid into the gap fills from the 21st, and then just, I mean, not the most appealing structure for me to personally short. Like, I'm not shorting banks yet, but when you look at this, like a notable seller showing his hand on the 6th, Monday this got smoked, right? Wednesday this got smoked, and then we obviously have the gap down on the Friday session, right? That gives you this relatively ugly weekly close. A lot of the individual equity within the sector looks hideous as well. But this is one of those things. I don't think it's ready for me to personally short it yet. I think you have a lot of gaps unfilled below. You have a less liquid footprinted high, in my opinion, in the gap fill up here at 51.62. And I think in the context of things, this is important. This is a gross daily closure. It's one of those things I'm going to probably see if we can pull back to like 49, get the rally to 51, maybe a higher low attempt, and then take out these highs. Maybe even establish a new all-time high for the UTAD in this range. It's a big red flag when they look like this. The Monday print was hideous. The Wednesday print was hideous as well, and we actually had a flat closure on Thursday's gap down, right? Relatively underperforming S&P 500 and QQQ closures on Thursday. But that's probably a big red flag. And then the path of least resistance is established through this in-wong from the 27th. Gap down lower high, and then we fade. But it's one of those things. It's a big red flag, right? And I would like to see like I said, like that, and then evaluate how this goes. But you have a lot of names that looks pretty gross and gave you some gross daily closures. The Wednesday print on Schwab was pretty gross, and then we had this massive seller off open today. But not one of those names. I've discussed this a lot. Not one of those names that I'm really positioning myself in quite yet. Not the cleanest look, in my opinion. JPM, we had a pretty ugly Wednesday closure. The weekly closure is not giving you the best look, fading the highs of this range on some volume on a small spread candle, also fading the March highs. Visa smoked. I mean, even Schwab's weekly print was gross as well, but Visa smoked. I mean, this is one of those things where this is such a mature campaign. This and MasterCard at these all-time highs with these distributions and these exhaustive climaxes above said highs, that this news doesn't even matter so much as the campaign that was established matters. That outweighs anything. That's why you see such an outperformance in the breakdown today on MasterCard and Visa in comparison to the rest of the sector. Fuck PayPal. These are campaigns that are very mature. I mean, you look at the context of these in January to February, the legs that we get following the April reversion, following the stalled progression at new highs, the exhaustion in the legs coming off from said highs, non-structural continuation, and then aggressive sellers showing your hand on Visa. The consolidation, the preliminary signs happening in quarter 3 of last year, I guess you could say, on Visa or MasterCard, but the broader context of banks, a lot of them occurring in quarter 1 of last year. This report, this stalled high, the digestion and consolidation in January into this rally, very unstructured. The report, right, we know about earnings reports and what they offer for those large parties. The subsequent consolidation in this range, there's a lot of liquidity built up outside of these highs after 2 months of consolidation. Swept, hands changed, leg lower, 30%, right, 20%. The reversion trade-off of the previous highs from 2024 quarter 1, and the preliminary signs of a seller throughout the way until we reach these previous highs, right? There's, influxes of volume, a decent little leg, continuation higher, and then now this print, right? It's just waiting for something. And now these are the weekly prints that are established. These are fucking hideous charts. Even Wells Fargo, right? This is off news. This is in a gap in a previous range of distribution in that 2024 high range. It's such a pivotal point within this chart and such a sequence that occurs with that news that I almost kind of feel stupid for not looking to trade this, right? It's such an important thing to understand how these hands are changed and where they're changed at and where the draws are. But that's pivotal. But nothing. I mean, I'm not gonna try to short this. Like, what am I gonna? Where's my risk? It's just a red flag. Like, it's not an opportunity I really want to trade yet. As far as the broader perspective of the banks, BlackRock has a pretty gross weekly closure though. But we'll have to see how these go. So is Citigroup, so is Bank of America. But that's a major red flag. It's this sector as a whole looking hideous. And something I keep my eye on going forward. I think the best short is yet to come. I think the best short overall is yet to come. I think we can capitalize on this 1 to 2 more times, depending on how this sets up to 580. After that, I'm probably going to flip along Tesla and MU, and maybe growth names. Right? This is a chart that's been in this kind of accumulation under COVID lows for 2 years now, with the kind of initial climax coming off May 2022 on a lot of these individual names. I'm not going to go over all of them, but Roblox, Roku, Square, right, on a lot of these individual holdings of ARKK. And, some of them performed, Tesla, Roblox. Some of them didn't. Square, DraftKings. Well, DraftKings is a little bit Square, Roku, I guess you could say. But like the broader sector, or broader holdings of this ETF has seen a lot of this accumulation of their COVID lows. They initially saw the COVID rally, the growth sector see that money pour into it, um, and then kind of reality set in, and a lot of these names make 90% reversions from all-time highs, even more, before finally seeing that kind of interested party with, the highest volume we've ever seen and probably ever will see for a while until we top out on May 2022. But I don't know. It's not anything that I like buying long term. It's more or less just, you didn't even take out the August 5th lows, but like this is a pretty imbalanced range. I'm not surprised that the draw is into this range. But all that I really find interesting here is following this reversal. We do see a nice amount of consolidation throughout this print that we established the week of the 19th and the 27th. And then we see this really aggressive 8.5% week, 8.36%, 8.46% session on the 6th. Obviously, a lot of this is coming off. Obviously, a lot of it's coming off of Tesla. But even when you look at SPY, you look at this range, how it developed. You saw a really nice leg on the 19th, and then exhaustion above the highs. Following that into, obviously, this week, the week of the 9th. With AirKK, it's not necessarily that. I was never sitting here looking at a short on this. You didn't really have the highs faded. You kind of had the gaps bid, a decent leg, a higher low. Path least resistance model potentially establishing itself on the 6th or 5th. A lot of this is Tesla, which I'll talk about, but it's not really like that gross. And then you get a really nice footprint on the 6th, right? And so then you get this subsequent exhaustion, right? The fizzling out, the buying kind of stalling, interlapping with the way a lot of these names look, especially in that CPI gap up on the good print as well, which, if you know, you know. And then the kind of breakdown and gap down that held up really nice today. Closed green, closed full spread. You look at SPY and QQQ, you look at XLF, and you look at ARKK, and you can kind of understand the thought process here. I need some water. Hold on. So you look at how this held up today in comparison to the broader market as a whole. Night and day. I don't really care too much about any individual names. Energy. This was a big red flag last week. Not a chart that I'm super interested in. You have, on a lot of these names, a major capitulation that occurs in April. Just a lot of aggressive liquidation on some positioning, I think, that occurred in April. And then, you see this very, notable volume, the highest in a while. The week of the 7th, sweeping the 2023 and 2024 lows and attempting this gap. But it's expected to have a buyer off of that range. I don't really have this is a lot of consolidation, a potential absorption of supply. I don't have such an edge here that I'm so interested in trading a lot of these names. Especially the way a lot of them move as well. I don't like trading them unless it's pretty clear cut. But a big red flag this week, you had a super clean pop on Wednesday. And when you look at Wednesday, once again, this goes beyond, you know, everything. Just understanding this is not trading or execution. This is understanding how money rotates. Look at the prints that we established on Wednesday off of CPI this week. In comparison to SPY, in comparison to QQQ, in comparison to the financial sector, in comparison to mega cap tech, and then in comparison to energy, right? That's such a big red flag here, and I feel like it's something that you really have to pay attention to. The rotations, the sectors, the risk on and risk off names. Someone was bidding this. Someone was, there's money rotating into this, and it's not unwarranted that the news is a war in the Middle East, right? Money's rotating into energy. You're seeing a strong, maybe not rotate, maybe not bottom now, but you're seeing a strong buyer in energy printing nice candle closures across the board on the Wednesday session. And kind of following the subsequent consolidation, you could potentially have a pretty easy move for this sector into some gaps above, right? Not anything I'm personally really interested in at all, but a sequence that you have to take into consideration as far as the outlook of things going forward when you have that happening, right? It's not a coincidence, even just looking at the sectors themselves, that this Wednesday print is faded. There's a larger seller. There's a nice leg that happens, and a couple of lower highs on Wednesday off of a CPI cold print, right? Which, and happening in a pivotal range following this price action. It's no surprise that when you see energy pop like this and you see tech look like that you're going to get some continuation lower. And I'm kind of upset at myself for not seeing the same thing. But this Thursday print threw me off. And after the sequence that I had, I decided mentally it's a little bit better to kind of, not really deal with that. But you also had CPI, deep sea gap filled, February highs taken out on SMH, semiconductor ETF. This is a big one as well, right? And then you see the very low volume print on the 12th, right? So that's something you have to pretty much pay attention to. Relatively importantly, in my opinion, man, I'm low-key hurt because I feel like those Julys really could run you to 131 to 137, but I'm gonna just try to short it next week off a lower high. We'll see. It's not the end of the world. Mags faded the tariff print high at 54.24, right? Saw a very aggressive leg on the 5th, courtesy of Tesla, into the 27th gap. And then we see the kind of exhaustive look into that CPI failure. Not really much else here. I mean, SQQQ looks good. Not really much else that I'm too interested in talking about. Mag 7. I mean, like I said, video looks hideous. I'm just gonna stick to SPY shorts, but I mean, positioning yourself between 143 and 145 on Julys up here does not seem like a bad move to me personally. Um, it seems like a pretty good move to me. Um, Not a good chart. Highs being sold off above the report following the attempted gap fill from the 27th. A little run up prior to said report where we obviously see this structure. Something I'll pay attention to. Something that, I mean, this gap could be wiped. We could definitely get a clean move, all the way down to here on just hourly perspective. So that's something I'll keep an eye out on. But like I said, I don't mind shorting that. I'm just going to try to short SPY. I think it's the easiest. But as far as this week, I think we can get a move this week. I'm going to try to short SPY. The expiration depends on what happens into data sets. But we're kind of pinning it under that 141.62 spot, right? Finally getting that closure under it on a daily perspective, finding it on a weekly perspective back to back times. As far as this sequence being closed above it, just, highs being sold, aggressive sellers at said highs on the tape. a very seller dominant chart, and I think this range could, it could move relatively easy within this range. It was a little bit early. I think this is probably going to work itself out to 131 into July. Tesla, this is something I'm going to look to focus long on. We've digested this print. We've, pulled back in the lower high range, this major capitulation print, filled this gap. And we're not really seeing a large follow through from a seller or anything yet. Obviously, the buying kind of fizzles out on Tuesday, but this is a relatively clean looking print that we established on Friday. I mean, a lot of volume comes in at high of day on Thursday, but I'm not shorting this. This is a name that I like long within lower high territory between 295 and 305, depending on the broader market and the timing, up to like 350. Like that's just a focus going forward, but nothing that I like quite yet. Um, Meta, a major red flag. I've talked about this chart a lot. You see the nice week that occurs last week, 7%, 8%, which fucking sucks, and saw into this gap from mid-February. We see that exhaustion. We see the volume fizzle out. We see the kind of volume pour in on some relatively ugly prints on Monday. Um, kind of three highs sold off. The Wednesday CPI print being the kind of kicker, and the continuation lower. This is a major red flag on a chart that's very distributive, and I think that this could honestly pull back to maybe this print, maybe equilibrium of this range a little bit deeper to like 660, and then we can maybe get the full gap fill. I kind of wouldn't be surprised to see that, and then we can get the move down to like 550 on Meta within the year's end. But we'll have to see. Microsoft, another all-time high potential UTAD in this range, I think. I mean, if you want to go ahead, and that's not the most impressive. The exhaustion that occurs as we break out the new highs is not very impressive. Tape has been relatively bearish. Where the volume comes in at. Another name that made its reversion trade, and we just continue to rally, and it's continuing to develop that distribution, develop that campaign, and the draw is just to a new all-time high. I would like to see a nice leg come off of this. We'll have to see if this is the top though. Apple, this is a name that I want at 224. I think that there's a lot of just relevance behind that range. I think that when you do see a seller at 213, the relevance behind it is big. We potentially see a lower high here. I think there's going to be a buyer within this 193 range, sweeping those lows, 0.5, maybe 190. And I think we're going to see, maybe, honestly, give me a little bit lower to 190, and then give me 223 if everything aligns. I think that's going to be something to keep your eye on. But I think this trade's lower and then higher. We're seeing a large seller within this range, and these weekly lows have not been taken out. We have a gap to fill. But I've talked about that chart so much. Google doesn't look bad. I'm just not longing it. A really healthy Tuesday print and subsequent consolidation. Could be a focus of mine long later on into like July, I think. Like I'm still looking short. I can't look at this and I'm looking at this and I'm like, damn, I kind of fucked this up here and then here. I'm not taking risk on over the weekend again. I'm just kind of looking at this and like, there's no way I'm not going to try to trade this to 579. And I think we can honestly see July in itself be a relatively bullish month and do a potential top. Anything else? We'll go over here. RTX. We'll have to see how this goes because this is one of those ones that I think is a broader context distribution since October of 2024, following 100% move from 2023 lows. But I haven't seen anything to execute on yet. But a lot of late buyers can potentially be trapped off of this war news. They probably are. So we'll have to see. TSM, a lot of volume coming in within the secondary test, within the deep seek gap. I think that's just going to be the draw. I think that's probably going to be the top on TSM. So I kind of said this earlier. It's like we can get an attempt in here. We can get a decent leg, maybe pull back into like 200-ish, which is a little aggressive. But give you a good sign that that seller that previously took us 30% is still a little bit aggressive. There's still a little bit of supply. But we kind of have that bid. We have the broader market rally. And then maybe we push up into 221 before the report. And that's kind of the LPSY because this deep seek gap is important. It's relevant. And there's a lot of important intent behind it. And it, like I said, it's just something big happened in April, and there's a draw. There's a reason that there's a draw in all these ranges. There's an aggressive sell. DeepSeek was really the first domino to fall. Maybe the Fed meeting in December. I think they started setting up the dominoes after the election. Honestly, in March, I'm about to miss name, but DeepSeek was the first one to kind of start falling, and it happened fast. It happened aggressive, and no wonder we're seeing these kind of just price action supported by things under the hood. Nonetheless, that draws and reverts into these means, similar to how we had the reversion to the mean on the short side, we have it on the long side, and then we have it on the short side again. It's just how these things work on a broader context. It's how the hands change. People make money off of people that are fucking stupid, and that's how it always has been, right? There's ways to make money in this game, and a lot of people do it that way. Palantir, I mean, this still has no structural buyer following the June 5th print, but the continuation is there, and I don't really want to short this yet. I've talked about this a lot. I've talked about Hood a lot. We saw the gap down Monday from the failure to be included inside the S&P 500. Very weak bid throughout this entire range, and then the gap down that was developed in the last night's session. Broader context distribution, I just had no edge yet. Uber, this was another one. Broader context distribution from the 2022 lows. I just have no edge yet. Actually, I kind of do. Like, I really could have shorted this within this gap fill and this footprint that figured as 5% on the 29th, but I don't really feel like trading that internal lower high, especially giving up so much of the move. I think this can potentially trade higher. I have no edge on UNH yet. I'm not really interested in this. It's still within a bear gap. Not really giving you the cleanest follow through off of this move yet. Solar, what a surprise. I mean, you look at solar and you look at Tesla, there's only two things green besides RTX and energy and yields and volatility. That tells you something. This will be a watch in the summer. Shares work here, like I said, but nothing I'm interested in yet via options. I don't even think, I'm probably not even going to trade Starbucks. It's a name I'm watching. It's a name that has potential to revert a little bit more to the mean for this April 3rd gap closure. That gave you kind of the climax event on April 7th and then on the report in April 30th with a lot of volume behind it. You get a nice leg. Maybe if they digest this a little bit, I can trade this to $100. Just another kind of potential long focus going forward that has a little bit of room left and has given you this look of climax is happening in an important spot within the chart, but not necessarily something that I'm long-term focused. Disney. This is the 3 lower low accumulation. Climax starting in May of 2022. Continued climaxes off of, sellers on the report, and then the initial or eventual buyer off of the lows that were established in COVID that sparked the rally to new all-time highs. That gave you that kind of exhaustion from a seller, gave you that kind of changing of the hands, and sparked the rally from 79 to 123. And then we kind of had the failure on the upper extremities of this range, the pullback into August 5th, and then the subsequent, pop into the report in the election, lower high, and then a massive breakdown where we take out those August 5th lows. I would have loved to see $79 taken out, so maybe it's something that happens in the future. But we do spark the reversion trade. Nothing that really appealed me too much about this name. Like I said, if it would have taken out 79, would have been sick. Until now, until we have the kind of secondary test of this 118 spot, right? This kind of weekly high range that was faded. And we're seeing a really nice, strong, healthy candle occur within this range and a little bit of some volume harmony pouring in. Harmonic volume patterns potentially pouring in. This 0.5% red day on a little bit of increased volume doesn't pique my interest so much. But it's one of those things, right? We had the reversion. This might have a little bit of room left in the tank on a path of least resistance model. It's something I'm looking at into July, and that's it. Same with MU. I mean, honestly, MU is one that could run, but we have the report next Thursday or next Wednesday after hours. I've talked about this a lot. I mean, we get the gap up, we get the continuation. Now we're kind of stalling around that 115 range. I'm not going to long this yet. I'd much rather long a little bit of a pullback, maybe a base and break. See how this looks on the report potentially. If this can pull back, open up above there, all those sell orders are smacked. That bidding and hands changing kind of props us up to 120s within the day or two. So something I'll look at. See GM 2025 report or 2024 flush. I'm not gonna break this all down, but just path like areas where there's a lot of supply that's seeing very little progression, and you're seeing subsequent legs that are bid and higher lows established, and tests of that supply develop very weak continuation. The draw's higher, and the report can catalyze that, and it's something I'm looking at. But that's pretty much it for me. Like I said, I mean, it's just 110. It's dude, it sucks that this was the way that I traded this range. Um, but it's one of those things that, two mistakes really kind of set me back. I think that, um, if I had left room to add this week, or if I cut this position, building out July's up here, especially in the CPI, seeing the correlation between a lot of names would have been perfectly fine. Um, and we have the two lower highs developed, and could have probably trimmed some here. And like I said, I think we can push 593. Honestly, July positioning, not concerned with that gap. Um, I think 590 is equilibrium with the range. That can kind of be that first trim if you're already positioned. I'd love to reshort a lower high off of that, and then I think 586 has the potential to be absorbed, and we can get the push to 579. That can maybe happen this week. We have the Fed meeting. We have expiration. We have things under the hood, I feel like, that are relatively important and relevant behind this range. And depending on where we open up, I'm going to position relatively aggressive short side. I think those banana charm flows can can potentially turn bearish. But I just miscalculated this a little bit. Um, it is what it is. It's still short in my opinion until lower, and I have my vehicles long when that's the time. I think you've seen a lot of red flags for the future in this sequence, and I think that this is the UT of our redistribution, um, following this, right? Following something that, this is super relevant. There's such a relevance behind this, how this occurs in the volume, and I think there's a big buyer. And I think it's just going to be a draw to new highs where there's liquidity, per se. And the window as well. I think it will occur in the quarter three. I think there's volatility is relatively important. I think we can see a little bit of a pop on vol, maybe on expiration, if that. Um, maybe to like 25 to 28. That would be sick. 28 would be sick. If we, like I said, if this can happen similar to August or December, I think this could move pretty nicely with the expiration, the Fed meeting, and the structure overall to 579. Wouldn't be surprised. It's a top focus this week. nvda is a short focus. I'm going to stick to SPY because I feel like the fact of the matter is, um, SPY, depending on where the entry is and depending on where it's off of, I feel like you have a relatively clear target within this range. And I feel like NVIDIA, I mean, obviously 131 is the target. Maybe if you get, I think I would focus on this. If we see 137 lower high, that might be a focus of mine to 131. This will be a watch, depending on how we open up, in all honesty. This will be a watch if we can get that. I just want to see how equilibrium acts. I want to see how 590 and 137 act. If we can see a weak bid, I'm going to position myself short on July's and play this to 579. It all depends on data, though. We have OPEX on Friday, so it's kind of why it's going to be. It's questionable. Like, I really don't know how I plan on trading this still. I know I kind of just said it, but I really don't know because if we don't see a move, it all depends, right? I just want to position on a lower high on 590 to 579. If we see a nothing burger on the Fed meeting, I think we'll get some opportunity to add in maybe something off OPEX, maybe something after OPEX. We have a week of flows to the end of the quarter, but I mean, you look back at, like I compare it to December, there's the potential for one of these two scenarios, in my opinion, right? Either December, a massive footprint of expiration, Fed meeting, or March, right? We have in December is obviously the breakdown off of Fed meeting on Wednesday. What we have in March is the buyer, the weak bid, the lower high, the exhaustion, the fade, and this happening. Here's March OPEX. Here's March 30th, right? Here's the end of the quarter, right? We see the little bit of a breakdown, a further draw into these lows. Following May OPEX or March OPEX, right? So this is after March OPEX, and this is before December OPEX, right? So if we get the move on Wednesday, I'm going to look for that. If not, I'll probably look for it following March OPEX, obviously depending on what we look like and see how we look at the 579. And then we obviously see the end of the month flows kick in, and this is a little bit of a different sequence. But that's enough for me. I don't know. It's been a fucking difficult range. I'm gonna take it one day at a time, 1 week at a time, one step at a time. I'm still short until we fill these gaps and digest some names. So I'm gonna continue to look short. The way that Nvidia looks, I'm gonna continue to look short. Those are really my two vehicles. The way the banks looked, the way the energy looked. I'm gonna continue to look short. Um, those are really my vehicles. Um, those are really my two vehicles, and I'm going to execute accordingly. If we get some continuation, I'm going to add a lower high on one of these two names on July's trade to 579. I think this is all like an hourly distribution occurring on NVIDIA above the earnings candle high, and I think SPY's in a redistribution UT. But yeah, like I said, like this is phenomenal. So that's pretty much it for me. We'll have to see. Like I said, two scenarios I think that can play out here. Both of them result in a sell to 131 and 579, NVIDIA and SPY. One of them happens, you know, Fed meeting catalyst. The other one happens prior to the end of the month flows. Ideally, I don't think it would happen like this. I think it would happen like some continuation to 586, a lower high. We bid it over the weekend, maybe get a gap down. But you know, I'm not looking long. I'm not looking long for a while. I mishandled the short a little bit here. Um, you know, a big if, it's easy to talk about it in hindsight. If I had some room to add, I would have continued to add in this position. Is all I'm going to say about how this week occurred, how this price action was developed. If I had room to add, I would have continued to add in this position into the CPI print, noting the price action the entire week, the appealing legs on Tuesday, the closure near the highs, but the news prints being sold off on volume, the tape being so heavy on NVIDIA, the exhaustion zone, the nice leg on the 5th, all leading to CPI giving you um, just giving you a very gross look, and then we finally see, a 1% day on Friday. Obviously, I'm not positioned, but if I had room to add, that's a big if, but I would. The one thing I'm going to say about this range is even above these highs, I'm continuing to add. The window's there, but I think it's one of those things I think this can happen. Um, and I think this is probably going to top us out, ideally top us out for this range, and then you can just trade the subsequent lower as it develops. So that's it. That's my kind of recap of the week, recap of the sequence, scan of the broader market as a whole, outlook for, you know, the quarter, just what I've been doing bad, what I've been doing good, what I've been doing bad is I think two big mistakes here led me into the hole that I dug on that position. And that was handling the trade initially wrong, from the week of the 12th to the week of the 19th, and then just straying away from my plan. Trying to short NVIDIA on a lower high, right? Just sticking with SPY is beautiful. Nice position is built out um, last week into this week and then the next week, in my opinion. But NVIDIA is a chart that's very gross in my opinion. Um, and it's one of those ones that I think can push 131 before July. It's a broader market gauge in my opinion as well, but it'll be a focus. This inspired my focuses. I was too early, but now you see the distribution above the earnings print. This lower high or this lower high are my focuses. If we get that. If we get this, I'm shorting it, covering it, shorting it, covering it. It all depends, honestly. In all honesty, though, NVIDIA is probably my main focus on a lower high, though, depending on if we get this gap fill. So that's pretty much it for me.